Hi guys, I'm Aboki. Welcome back to the Forex trading course. Okay, today I'm going to be taking you on candlesticks, correlating pairs, patterns, chart patterns, trend lines, support resistance, and price action models. Under it, we're going to be talking about the trends, the BMS and the SMS, shift in market structure and the break in market structure. All right. So yeah, let's start with candlesticks here. Okay, so candlestick is basically every technical analyst needs to understand candlesticks. And that's why we have an already prepared material available for download. Okay, it's going to be made available to you in this Forex trading course. Okay, after you've gone through it, and understand the whole candlestick formation and everything, then we can continue with this video. Okay, now we're going to be talking about correlating pairs. Okay, how do pairs? So we're going to be talking about correlating pairs. Okay, how do pairs correlate positively and negatively from each other? I'm sure most of you don't know that, but I'm here to enlighten you on that now. Okay, let's take for example the dollar. Okay, almost every currency trades against the dollar. Okay, let's take the dollar for example. The symbol for the dollar is called DXY. Okay, dollar index. That's how we see the performance of the dollar. Okay, so now I'm sure most of you don't know this, but here it is. How does dollar correlate positively and negatively to other pairs? Now, any pair trading against the dollar or with the dollar, or any pair trading against the dollar or with the dollar, will always have an impact towards it. Now, let's take for example USD CHF. Let's take for example USD CHF. All right. Now, what this means is that when we take that pair for example, once dollar is having a bullish momentum, okay, because dollar is the base currency on USD CHF, okay, it will correlate positively to the dollar, whereby dollar rises, okay, USD CHF too rises. If dollar is bearish, okay, USD CHF too is bearish. So you understand what I mean? Meaning, if dollar is going up, USD CHF too will have to go up. Okay, if dollar goes down, USD CHF will have to come down. Okay, which is correlating positively to the dollar. Okay, and this happens to any pair that has dollar dollar as the base symbol with the pair. Okay, meaning examples are USD CHF, USD CAD, USD JPY. Although they might not really correlate 100%. Okay, they might correlate 70% or 60% of the whole time, yeah, but you actually feel that correlation on your chart. Okay, well, you actually feel and notice those correlations on your chart. Yeah, so now let's talk about negative correlations. Okay, now negative correlations, let's take for example pairs that have dollar as their quote currency or the counter currency. For example, Euro USD or GBP USD. Okay, that's the pounds against the dollar. Okay, where we have the pounds as the GBP USD, where we have the pounds as the base currency and the dollar as a counter currency. Okay, meaning now what that means is that once DXY dollar is bullish, meaning when dollar goes up, the pair trading against the dollar will have a bearish momentum. They are correlating negatively. They are inversely proportional. Okay, once dollar goes up, GBP USD will go down, Euro USD will go down, okay, NZD USD will go down. That is negative correlation. At the same time, once dollar goes down, Euro USD will go up, GBP USD will go up and NZD USD will go up. So it's more of like there's a negative correlation there, and this will happen. You will notice this 90% or 80% of the time. Now let me give you an example. Now, if you look at the chart now, okay, this is the dollar chart. Okay, let's go to the higher time frame. let's go to the daily time frame. Yeah, so we should be able to see a little bit of correlation. So now what I'm trying to do here is I'm trying to overlay. This is the dollar index daily time frame. Okay, I want to overlay Euro USD chart on this chart. Okay, so you will see how they react, how they correlate negatively, how they are almost opposite, how they are mirroring each other. Okay, now let me overlay it on each other. Now let's compare with Euro USD. Okay, let's compare with Euro USD, same scale. Yes, edit. Let's put this on Candlesticks. Okay, now you see, if you can see my chart, you see how it is almost, this is like almost 90% correlation on Euro USD and dollar on its own. You understand? For every move dollar makes, Euro USD counters it. Okay, if dollar is going up, Euro USD goes down. Okay, now let me give you a fun fact. Okay, now Euro USD is the most traded pair in the Forex market. It contributes up to 20 to 30% of the total volume traded on the Forex market. So you don't know the ball. Here it is. That's why it will correlate almost 100% or 90% of the time with dollar. Okay, now if you're seeing my chart, it looks as if there's a thin line that mirrors every direction that goes on with the dollar. As you can see, when I adjust my screen, you can see it's almost like a mirror formation. Now let's compare. Let's take that off. Let's compare something that let's overlay something that correlates positively with the dollar, like the USD card. All right. Now let's see. There's USD card. Okay. Same scale. Candles. Now you see what I'm talking about. Can you see what I'm talking about? Okay, he has almost the same like move of the dollar. It almost follows the dollar in every direction it goes. And so that's why any pair that has dollar as the base currency, you understand, and has another currency as a counter currency, we have almost similar movements with the dollar, and this will help you your analysis. You know, if you can just mostly analyze the dollar on it. So like me, what I do is that once I have a directional bias, meaning once I have a direction, once I have in mind that okay, I want dollar to move in this particular direction. I believe dollar will move in this particular direction in the market. Okay, I believe dollar will move in this particular direction in the market. I use it to guide my analysis on other pairs. Okay, like now if I have okay, once I analyze dollar DXY and I see dollar is bearish, meaning I feel dollar wants to go down. Okay, and my analysis on USD CAD, USD CAD, USD Canadian dollar, okay, is telling me what I'm seeing on the USD Canadian dollar is showing a bullish move. I might not take it of high priority. You know, it might not be a high probability setup. Okay, I might not take it with utmost respect. But if you know USD CAD is also having a bearish momentum, and my analysis on dollar is showing a bearish momentum, okay, fine, yeah, it's having that correlation I like. You know, it's going to guide me on my analysis, giving me a target in the market. Okay, that's how correlating pairs can assist you trading the market. All right. So now remember, every pair that has dollar as the base currency, that meaning any pair that has USD at the front of it will correlate positively with dollar DXY, and any pair that has dollar as the counter pair or as the quote currency will correlate negatively with the dollar. That's going to help you in your analysis. Okay, now let's explore the trading world. Let's start analyzing the market. All right. as a beginner, okay, you need to understand and be able to pick up chart patterns which will help you analyze the Forex market. Okay, I have a few here with me. This is going to help you. All right. Now, chart patterns. Okay, chart pattern. And for every chart pattern I have on my chart here, we're going to try to relate that to the chart to see actual patterns forming on the chart. Now, let's take a look. First of all, we'll try to look at reversal patterns. Okay, let me show you an example. Let me show you an example of this, of market structure, an example of all this market structure on my chart. Now let's take a look at gold, XAUUSD. Look at gold on. Let's see. I think something happened on the daily time frame. Yeah. Yeah. Let's take a look at this. I think past record. Yes. Now look at this. Okay. This is a clear example. This is a clear example of an uptrend. Okay. This is a clear example of an uptrend. Yeah. Now remember what we said about higher highs, higher lows. Okay. Now let's try to annotate that on our charts. Okay. Now, okay, this is a perfect size. Okay. Now, okay, whereby this is our first starting point. Okay. Now, if we put in HH, remember this is an higher high. Okay. Why is this an higher high? It is higher than the previous. This is the trend start. Okay, this is where the trend started. Okay, but we'll be starting our higher high from here because why? It is higher than the previous high, which is right here. Okay, so now we have this as a higher high, and we'll have this as a higher low. Okay, higher low. Okay, now we'll have this again as the next higher high. Yeah, then this is the higher low. All right, now the next one, higher high, you can see it. This one is higher than the previous higher high, and then this one, of course, a higher low. Yeah. All right, now, and of course, then a major move happened. You could see it. It also went bullish from here, made a very, very, very big higher high, and of course, you also have to retrace to make a higher low. Okay, this and that's where the uptrend ended, except want to continue here. Okay, except want to continue here. This is where it started again. Okay, made a slight decline over here. Then a higher high here, a higher low, a higher high, and let's annotate it. Okay, a higher high here. Okay, a higher low. Okay, and we keep on going. Another one right here. Another one here again. Okay, now we have another one here. Then another one here. This is termed, like I said, bullish or uptrend. As you can see, system bullish or an uptrend. You can take a screenshot of this. Okay, so you understand where you see it on your real life chart. You can understand what a market structure is and how it correlates bullish. Okay, now let me show you the bearish parts. Okay, Now, if we take a look at, excuse me, let's scroll. Yeah, our present charts. Yeah. Okay, where do we start? Okay, now we're looking for a downtrend, right? We'll start. First of all, remember you need to find a lower high. Okay, this will be one lower high, and this will be our lower low. Okay, next replicate it, another lower high. Okay, then another lower low right here. Okay, now another lower high. Remember, this is on the daily time frame, meaning each candle represents a day. Okay, the next lower low. This is the next major lower low. But inside this one, we can see another trend, another downtrend forming again. We can see it have lower high here. Yeah, this is another smaller trend down here. You can see it right here, a lower low. Okay, lower high, lower low. One more. Lower high here. Remember now, you need to understand, this will make you understand the principle of market structure. This is what structures the market. This is how we identify them. Okay. Again, last lower high for the major lower low right here. All right. Now this is a downtrend market. Okay. This is when the market is in a downtrend. You can clearly see it forming lower highs and lower low. So when you look at the chart for the first time, you need to first understand, is this market an uptrend or a downtrend? Okay, you understand if this is an uptrend or a downtrend. Yeah. So you start looking for lower highs, lower lows, or higher highs or higher lows. All right. So once you can identify those parts, then you will easily know which one is an uptrend market and a downtrend market. We easily know which one is bullish and which one is bearish. All right, good. So now let's talk about support resistance. Okay, I'm sure you must have heard of it one way or the other, but let me explain. Let me give you a pictorial example. Let's try to picture this in your head now. Let me give you a pictorial example. Try to picture this in your head, okay? About support resistance. Okay? Now, imagine you're in a building. Okay? Just imagine this. Imagine you're in a building. Okay? You have a tennis ball. Okay, you have a tennis ball. It's just you in the building. There's the ceiling and there's the floor. Okay, now you bounce the tennis ball so hard. Okay, you just slam it on the floor like this. Once you hit it on the floor, it will act against gravity. Once it hits the floor, it will bounce. Once it hits the floor, it will bounce up. If the force you applied on the ball is strong, okay, it will hit the ceiling, okay, then bounce down again, hit the floor again, bounce up again, hit the ceiling, and bounce down. So, because you're in an enclosed area, okay, so the ball will keep on moving like this, up, down, up, down, up, down. Where the ceiling, okay, is acting as a resistance, and the floor is acting like a support. Okay, so the floor is acting like a support, the ceiling is acting like a resistance. Okay, just try to picture that in your head. Okay, now apply that same principle to the charts. Okay, that is how you can easily understand support and resistance. And trust me, this is going to help you in your analysis. Okay, now on the chart. Well, look at it. Let me take a little bit drawing. Okay, so let's say, okay, this is the roof. All right. So this is the roof. Okay. Then this is the floor. Okay. So this is the floor. Now, if this is support, sorry, if the upper part is the resistance. All right, let me show you just a simple representation of this on my screen. Okay, let's take the roof to be this. Okay, I remember it's acting as the resistance. Okay, acting as the resistance, and we have this here, and it is acting as support. Okay, now let's take this to be you now. Okay, and the ball, we bounce the ball really hard, hit the floor, it hits the roof, hits the floor, roof, floor, roof, floor, and then out. Okay, now you see this, you see how many times it hits the floor. See how it keeps rejecting at the roof and rejecting at the floor. Okay, that part where it rejects at the floor is called a support, and where it rejects at the top is called a resistance. Okay, now having this information alone, you can actually be profitable. Yes, I said it. You can actually be profitable on the charts already, trading the forex market, if you're disciplined and you know what you're doing. Now let me show you. And this is called a channel. When it keeps respecting both resistance and support continuously, it's called a channel. All right, it's called a channel. You can say price is moving in a channel. All right, those are forex terms. Okay, you can say price is moving in. Now let me try to show you one I marked out on my charts. Let's see. Okay. Now look at this now. Okay, look at this. Okay, remember, you see price keeps respecting this area. Tested it 1, 2, 3, 4, 5, 6 times. Keeps on rejecting at this area. That's called a resistance. Remember, 1, 2, 3, 4, 5, 6, 7 keeps on rejecting at that area too to support. Okay, now let's say we don't know this happened. All right, let's take the replay function a little bit backward. Okay, let's take it to let's say this point. Let's say just with the simple knowledge that you have already. Okay, with just the simple knowledge that you have already. Okay, you enter this trade. You want to buy CAD CHF on the daily time frame from this point where it is right now. Okay, you take in your long position tool. Okay, you click it. Your stop loss is a little bit, is very tight. Okay, and then your target is here because you know the market is going to, from that region again, bounce downwards. Okay, and then let's see what happens when you take this trade. See, market is respecting your analysis, keeps on going, keeps on going. You know, you're patient, you're playing the patient game. Then let's see. Okay. Now, it hits. Please, I need to take it back a little bit. So this area is going to be cut, but I'll continue recording. So I'll just take it back a little bit. All right. So let's say you have that now as you want to take this trade now, okay? And okay, you have your target around this area here, okay? And then you hop into this trade. Let's see what happens, okay? Okay, market start respecting your analysis. It keeps pumping. Let's see if it hits your take profit, which is this point. One, boom, it hits your take profit. All right, you see what happened there? Hit your take profits, and then you're out. That's almost 531 pips. That's interesting. All right, so just having this information alone has helped you in the forex market. Actually, trading in the forex market, you actually need less. Actually need less information. Trading the forex market, you actually need less information for more results. Okay, but that doesn't mean you shouldn't have a broad amount of knowledge for this. Okay, now stick with me and I'll show you more. All right. Now, we've talked about support resistance. We've talked about market structure. We've talked about correlating pairs. I think one more important thing we need to talk about is trend lines. How do you use your trend line? Now, let me tell you something. Support resistance doesn't really have to be, on a straight line. It doesn't really have to be on a straight line, where it has to be bouncing up, down, or like the roof of a slant. It can also be slants, like this. Okay, it can also be slants, where you drive from one point to the other, and market can just keep respecting that region that you've drawn. Okay, you can just keep respecting that region, and keep bouncing here, bouncing. Okay, this is a trend line you've drawn. Okay, market can just keep respecting that region, respecting that slope. Okay, market can just keep on respecting that slope, and it can be both ways. It can be both, as a support. Remember, anyone down is a support, and it can also be as a resistance. Rejecting from the top. All right. So now, that will bring us into a very, very interesting topic. Okay, that will bring us into a very, very, very interesting topic, which is chart patterns. All right, this movement between support resistance on a slope, brings us to many patterns. Okay, in which market can form to understand the next direction. Okay, now there are three major groups of these patterns. All right, they are the reversal patterns, the continuation patterns, and the bilateral patterns. All right, let me explain that to you. All right, a reversal pattern means when market comes back to the screen, okay, a reversal pattern actually means one market is coming from one direction. Okay, one market is coming from one direction, and it enters that slope, and it reverses towards the other direction. That is a reversal pattern. All right. Now, when we talk about a continuation pattern, as the name implies, it means when market is coming from a slope, enters the pattern, and then continues downward or upward. Okay? Now, when it comes to a bilateral pattern, all right, it means when market is coming from a certain direction, okay, you don't know whether the market wants to go up or go down. All right, it's a two-way thing. Market can go both ways. You understand me? Market can go both ways. Now,